The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Sorry about the late start here. I got stuck on a phone call and had trouble getting off of it, so I do apologize. Do appreciate you taking time out of your day today to join me on this webinar. We're going to be looking at a few different annuity products, diving in, looking at some increasing income options on some annuities. So appreciate you taking time out of your day. And again, I really do apologize for the late start. We're going to go ahead and get started here and look at a few intro slides for you who have not worked with me before. My name is Laura Johnson. Work here at IMS in the annuity department. So anytime you need help with any annuity stuff, feel free to give me a call. I'm happy to help. We're going to start off by looking at a few incentive programs we've got available here at IMS. We're going to start by talking about new producer bonus. We've got 3 different tiers, $100,000, $300,000, and $500,000 levels. On the first tier, doing $100,000 single premium life or annuity case would generate, as you can see on the screen, $750 cash bonus. We'll build you a website and pay for it for 2 years or get you the latest generation of an iPad. If you decide not to cash out at the $100,000 level and go for $300,000, you can see there's some other great options. And if you choose not to cash out at the $300,000 level, you can go all the way up to the $500,000 level, and we'll get you some one-on-one coaching with one of our seminar coaches, get you some travel rewards for Ritz-Carlton, or there's always a marketing reimbursement option at that level as well. One thing with this is for people who are just now getting contracted with IMS or just recently did. This is good for your first 180 days with IMS. And I will mention it does not include controlled business. After that, we move you into marketing reimbursement program. Our marketing reimbursement program gives you $100 for every $100,000 of index annuity premium you write. For every single premium life $100,000 you write, we'd put $200 in a marketing account for you, and for every $10,000 of life target premium as well would be equivalent to $200 in marketing reimbursement as well. Another great program we've got, as you all know, your business is built on referrals, so is ours. So if you're happy with the service you're receiving at IMS or happy with what we're doing for you and have another agent who might benefit from our services and refer them over, when they do get contracted, we'll give you $50. When they write their first piece of business, you get $100. Then going forward, you'll earn 20 basis points on all the business they write. I will mention that this is paid out quarterly, so we don't do it on a day-to-day basis. It is just done quarterly. Here at IMS, it's part of our name insurance agency marketing services. We're not trying to be the biggest FMO out there. We're trying to be number one when it comes to service, making sure you have what you need when you need it. And that starts with picking up the phone when you call. Every time you call, you're going to get a live person. The person you need is out of the office or unavailable. There's several others in the office who are capable of answering your questions. So really just trying to help you as soon as you need that assistance. Helping you with case design, getting you all the forms, making sure you're compliant on all your training, all those things we do here on the back end to make sure that your business flows through the channels at the appropriate speeds. We do have a paperless contracting system now. We are set up on SuranceBase, so as far as contracting goes, we can add carriers, take them away, do whatever you'd like rather quickly without you having to do a bunch of extra paperwork. Our creative team, I think this is one of the most important departments for you all. They're here to help you grow your business, whether it be doing a newsletter, helping you design a logo, getting you some business cards. If you want to do some online marketing, social media marketing, or email marketing of some sort, do an online newsletter, website, all those different things the creative team can assist you with, then you can use your marketing dollars here at IMS to pay for some of those services. So if you have something you're looking to do or something you'd like to get done, give Sean or Jacob or Riley a call. They'd be happy to help you with that. If you haven't been out on our website, as you can see on the screen, www.imsinc.com, a lot of great tools, quoting tools. We've got options out there for e-apps under the e-app solutions. Probably one of my favorite spots, though, is a support tab, sales resource library. It's a great way for you to have access to a lot of great tools for your agents. I mean, anything from fact find, or not for your agents, for your clients, fact finders. If you need to do a financial calculator, we've got a lot of great client presentations out there as well that are client approved. I ran into a situation yesterday. A client wanted to know what a stretch IRA was or have more detail on that. There was a 4-page document out there specifically talking about stretch IRAs. So some great ways to get some good tools for your clients. I'm Wealth Management. We recently, a couple of years ago actually now, started an RIA in this office. So we do have a registered investment group here. You can do fee-based securities. If you've got your 65 or your CFP, you can get registered with IMS Wealth Management. Charles Jr., Mike Hansen can answer any questions you may have. A couple things I am going to mention about our RIA. When we built this RIA, we built it for the insurance producer, someone who's you go into a house and often the client may have 500,000 and we can only put 400 of it into an annuity. What are you going to do with that other 100,000? If you're not doing something with it, you're just allowing another financial advisor to come in and sweep up that business. So with IMS Wealth Management, it's a great alternative for you who have maybe studying for your test or don't have any interest in getting your test. We also do have a soliciting program available. And as I talk about that, I'll launch the first poll question. Faster we answer these, the faster we get to move on. With this listing agreement, depending on the state you live in, you could refer those clients up to IMS Wealth Management. We can service them for you while you're studying, or like I said, if you're not looking to do it. And depending on the state you live in, we may be able to pay you a portion of that fee that is charged to the client. So a good way for you to earn a little money off of those referrals. And also, if you're studying, once you pass your exam, we'll transfer all those clients directly to you. So it's a great way for you to have the opportunity to maybe build some AUM as you're studying and not potentially lose those clients. So it's a great opportunity if you are interested, like I said, either in wealth management as a whole or studying for your 65 or maybe the soliciting agreement. Go ahead and answer yes to that question. That'll just generate a phone call from Mike Hansen to answer any questions you may have. Life and Annuity Academy, this is one of our most popular training things that we do. We do these about 3 or 4 times a year. Bring in 40 to 50 guys at a time. Great opportunity for agents who are active in the life and the annuity market and looking to increase their sales. It's not going to be for the brand new advisor or agent out in the field wanting to learn about annuities and life insurance. These are in-depth topics, marketing strategies, really targeting how to grow your business for the seasoned producer. So we bring in 4 of our top producers. They're going to share exactly what they're doing for seminars, for radio, what they're doing to get in front of clients. They're going to share those strategies with you and assist you in putting together a plan to help you grow. So if you haven't been to one of these, it's well worth your time. We usually partner with one of the home offices in regards to this. So the requirement is we do require you to be active or licensed with whatever carrier we're going to be co-sponsoring it with. I think the first one will probably be with Athene. So you not only need to be licensed with them, but the home office is actually getting an opinion on who we bring into to the meetings as well. So if you've written business with that carrier, that's only going to help you out as far as getting into one of those 40 seats. So our most popular event, so we do have a lot of interest. I'm going to launch another poll question. If you're interested in attending one of our ones we're going to be doing in 2020, go ahead and answer yes to that question. That'll generate that we send you out a link with a pre-registration. This doesn't guarantee you a spot. Lets us know you're interested. And then once we have the dates finalized, we're probably thinking end of February, 1st of March will be the first one. Then we have your name on a list so we can reach out to you regarding those dates and agenda and see if it is something that would be a good fit for you. So really think it's worth it, the few days. It is all expense paid, so we cover flights, we cover the meals, we cover the hotels, we cover it all. So really great opportunity for you to get some one-on-one training with IMS. I know I'm flying through these early slides, but it's my fault since we started late. Last thing I'm going to talk about before we jump into the products is a couple of our trips we've got coming up. We did just announce not too long ago our IMS and Athene 2020 Marketing Summit, so we are co-sponsoring this with Athene. I think we're one of the few FMOs that actually does a co-sponsored event with Athene, so we're really excited about it. So all your Athene production will count for you and a guest to go to the Montage down in Cabo. We're really excited. It's going to be August 26th through the 29th of next year. Qualification began in July and runs through June of next year. I know that there's double trip credits going on right now, so all business with Athene right now is counting for double trip credits. Qualifications 3 million gets you and a guest there. So really excited about the trip to the Montage. And then we're also, well, this slide should be updated. We did just announce where our 2021 trip is going to be. I will let you know we are going to Mexico. There's 2 variations of the trip. First one is runs in March. The qualification started in July, runs through December of 2020. The trip then is at the first part of March. It's 5 days down in Mexico for you and a guest in an all-exclusive resort. It's our big marketing summit. 3.5 million gets you and a guest there. That production is life, annuity, anything, any business you're writing with IMES will count for trip credits toward that. And then we're doing an exclusive elite trip following that first few days, and 6.5 million gets you in the qualification for it. We're taking the top 20 agents, 15 to 20 agents, and that will be to a more exclusive island, staying at a Four Seasons for another few days of golf and spa and relaxation. So really excited about these trips. Everyone loves trips. So the good news is all your business that's being written with Athene for the montage will qualify you for this trip as well. All right, so we're going to be looking at a couple different products today. Why we're looking at this, we're trying to offer our clients better opportunities for income, trying to help them keep up with inflation as we're going through retirement. And then also there's been more and more products entering the industry that have this increasing income concept. So again, what the clients can expect, we're going to give them the opportunity for increasing income. We're going to let them remain in control of their assets while receiving income and have one that they're not going to outlive. Oftentimes we talk to clients and say, hey, what are your biggest concerns in retirement? They're going to tell you running out of money and keeping up with inflation. Well, with these products we're looking at today, we're going to address the inflation issue and show the opportunity and the power of increasing income, but then also provide them a lifetime income, one they're not going to outlive. So the goal with these products, as you see, inflation's been something that's been a problem for as long as we can all remember. I'm much younger than probably some of you, but I still remember when I was a younger kid going with grandpa to the gas station, it was under $1. And now today we're paying well over $2 for a gallon of gas. That's something that's not going to change going into the future years. So I think it's really important to address these issues. So the three products we're going to look at today, I just ask that you, as you have questions, just jot them down. Again, since we started a little late today, I will be following up with you individually following the webinar. My assistant Ashton in my office will send out all the marketing material to all of you guys. But if you do have questions, just jot them down, and then when I give you a call following the webinar, we can talk on a one-on-one basis about those questions. So first product we're going to look at today is the AthenaScent Pro bonus. All three of these products we're going to look at today have increasing income. All of them have a different time and place where they're going to fit in and be the best fit for a client. With Athene, you can start income as early as 30 days after issue. It works for both qualified and non-qualified money. It does allow for both single and joint payouts for both qualified and non-qualified money, and has a 1% rider fee. I will go back to the qualified, non-qualified. A lot of questions come up regarding qualified money and joint payout. The money does have to come over like to like, so we have to bring it from John Smith's name over into John Smith's name, but Sally Smith can be maybe it's the spouse is the primary beneficiary. As long as the spouse is a primary beneficiary, when you go to activate the income, you are allowed to elect joint payout on that. So it has to be a spouse. They do have to be the primary beneficiary. Minimum on this product is $10,000. Issue ages go from age 35 to 80. Let's go on to the next slide here. With this product, you really get two choices, and we're really going to focus on option 2 today. I will mention option 1 so you're not confused, but first you're going to pick, I always explain to a client, we get to pick, first of all, how the money grows. Do you want to grow at just a guaranteed rate, 10% simple for 10 years, 5% years 11 through 20, or do we want to do a guaranteed with some multiplier? And that's really what we're here to talk about. With the AthenaScent Multiplier option, you're going to get a 7% guaranteed simple roll up. Years 1 through 10. Years 11 through 20, that does drop down to 4%. But you're also going to get 200% multiplier as well. So for all the interest that is being earned, multiply it times 2 and apply it as well. So let's just use the example in year 1, we earn 4% interest, okay? 4% interest times 200% would be 8%. Plus our guaranteed 7%. So in that example right there, we would see a 15% roll up in that year. And that's only earning 4% interest. Imagine what we can do with some of these uncapped strategies. I saw a statement yesterday where a client earned 11.21 multiply that times 200% and add 7, and you've got a really nice bump in that benefit base. So again, power of those interest credits really can have a great effect on your policy. So first, you're going to pick at time of issue. You're going to pick how you want the money to grow. Then when we go to activate the income, you get another choice. You get to pick, how is this going to pay out? Do we want a level payment? We've got an earnings index and an inflation adjusted. We'll jump into all those individually here in a second. With Athene, we've got several different strategy options. We've got the BNP Paribas, we've got Morningstar, we've got the SG Janus funds, and the S&P, obviously, both traditional and daily risk control options. So a lot of both capped and uncapped strategies with this product. So some great return capabilities. Like I mentioned, we're not really talking about the yellow line, which is our option 1 guaranteed. As you can see, it starts a little higher and just as a straight line. With what we're talking about, we're going to look at these dotted lines, right? So we're getting a 7% simple guaranteed roll-up plus 200% participation. So, we're going to start a little bit lower, but because the benefit-based bonus on the guaranteed is 10%, for the non-guaranteed, it's only 5%. So with that 5% bonus, and then with the interest over the years, you can see these dotted lines, worst case, best case, and more middle of the road. You can see even in the worst case scenario, over a 10-year period, we grew that benefit base to 271. The guaranteed would have taken us to 210. So even in the worst case scenario, we blew that guaranteed one out of the water. And that's really what we're looking at today, is how those interest credits can really affect the income rider. So that again talks about how it's going to grow, how it's going to pay out. We're going to look at 3 options. Level option, it's predictable, it is what it is, and it's never going to change. One thing I will say about the level option is it does have the best payout percentages. We're going to talk a lot about payout percentages in this webinar today. Payout percentages are super important. You can have the biggest bonus and the best roll-up, but if your payout percentage isn't there, you're not going to be competitive. So as you can see here, level payout, it is what it is. A lot of clients like that level guaranteed, but if we can get them through and have these conversations about the potential they have with increasing income, we could really change their lives. Let's go with that. So second option is earnings index. This is my preferred option when I'm talking about Athene. With earning index, this gives you an opportunity to have increases once you activate the income every time you earn interest. So, let's say we're getting $5,000 right now is our guaranteed lifetime income, and then we earn 5% interest. We're going to get a 5% interest or 5% increase in our income. So as you can see here, the guarantee does start a little bit lower. Our payout percentages are a little bit lower. Hypothetically speaking, though, we're in the 9,000s on the level. So yeah, we're going to start at 82.95, but look at the potential. Even in the worst case scenario, we grew it to 11,000. On the higher end, we could be looking at 12 to 13,000. It really depends what those strategies do. But again, I got a call the other day from an agent. It was pretty funny because he called me and he says, Laura, I got a call from my client. He said he got too much money from AIG. And I'm like, well, what are you talking about? Let's pull up the statement. Well, he earned 9.55% last year and got a 9.55% increase on his income. When we called the client back and let him know that, it was not a bad conversation. I can assure you of that. So those are the kind of conversations we want to be having with clients, is that we bettered their situation, didn't make it worse. The third option with Athene is the inflation adjusted. With this option, every time that there's movements in the CPIU inflation index, when that goes up, you're going to see an increase in your income. I will say with the CPIU, you are going to see more consistent returns. As we know, inflation is something that's always going to be going up. The one downfall with the inflation adjusted is that the payout percentages are just extremely low. This is the least common option used with Athene's product. We see the level used a lot, and then the earnings index is becoming more and more popular. Where I think that Athene kind of has their shining spot, and we're going to look at a couple illustrations here. I got to show you the guaranteed no matter what, and then we'll look at a non-guaranteed. But in this example, I use a 65-year-old waiting about 5 years to turn on income. We use $500,000. As you can see, they did get a benefit-based bonus. But let's just go ahead. We could guarantee him $26,950. Well, let's look at the non-guaranteed. With assuming a very low interest rate, I illustrate this very conservatively, 3.79, we are able to grow that benefit base much faster, generating an income starting out at 33.7. 33,000 versus 26 is a big difference. And then not only that, but we use the earnings index as we once we turned on income, and as you can see, the income just continues to go up and up and up. Even once this cash account has hit zero, the client is still seeing increases in their income. So again, the power of increasing income, it can be very, very good. Why I think that Athene's a better option when you're waiting a few years. What is nice about Athene's product is you do have that 7% guaranteed roll up. Some of the other products today we're going to look at do not have a guaranteed roll up. It's all based on interest. So Athene's going to be a good fit for that client who maybe wants to wait 3, 4, 5 years, but still wants increasing income. Here are the payout percentages for Athene. As you can see, the level are 1. You've got the inflation adjusted, which are very low in the middle. And then that earnings index on the right side is probably the most popular one that we're seeing used more and more today when it comes to increasing income. Payout percentages are very, very, very important. So always keep those in mind as you're looking at different things. Second product we're going to look at today is AIG's Multiplier. Minimum on this is $25,000, so a little steeper on that end. Issue ages are from 50 to 78. You can start income as early as 30 days after issue. Same thing applies for qualified and non-qualified. Both work for single and joint. And the rider fee on this product is 1.1. The way this product works is, like I mentioned, some of these products don't have a guaranteed roll-up. AIG is one of those. This one is completely built based on interest. So during deferral, we're going to multiply any interest times 2 and credit it to the income account. So we used to use the word multiplier a lot. AIG tried to simplify it a little bit more for clients, not to confuse them. So we say double the interest now. We double during deferral. Double D. Double during deferral. So in this example, 5% interest earned, multiply it times 2, 10% would be credited to the income base. Once we turn on income, we're going to do a 100% multiplier. So here's an example. We'll just say that we started income right away. Let's just say our payout percentage was 5% and we put 100,000 in. In year 1, our income would be $5,000, right? 5% of 100,000, yeah, $5,000. Let's just say that we earned 4% interest in the first year. Well, now we're going to get that same payout percentage, 5%, but instead of 100,000, we're going to get it on 104,000. So our income, your client's income just went from being 5,000 a year to being 5,200 in just 1 year. And that's assuming a 4% interest. Like I said, we see it all the time. Like I mentioned earlier, that example, that client saw a 9.55 increase. That was a pretty nice increase for him on his income. So we double during deferral and then we match once you activate income. So another example here, 5% interest earned after we've turned on income would give us a 5% credit to the income base as well. Payout percentage would stay the same. You're just getting the same payout percentage on a larger amount of money now. I think this is probably one of my favorite marketing pieces that AIG's ever put together, or any company. I think it explains increasing income in a good picture form. As you can see here, the example here, 62-year-old. And as you can see, this first 5 years was a little lighter because that's before they turned on income. This middle portion is once they've activated income. Let's just look at the first year. 3% interest earned, as you can see up here, 6% was credited to the benefit base. Year 2, 0, so we just stayed the same. 4% generated 8, and it keeps going. Here, after we turned on income, I will mention this purple line that we all see in the middle. That's your cash account going down slowly over time. So then we activate income at age 67. 67, 4% interest earned. We got a 4% increase here on our income. Zeros a couple years in a row. The nice thing is once your income goes up, it will never go back down. That is a nice feature. So it stays the same until we earn another interest, 5%, and on up and up and up. We just increased that client's income for 14 years until this cash account was depleted. That is one thing with AIG. Once cash account has been depleted, there will be no more growth. With AIG, we've got a couple new themes that are really exciting that are going to be announced here in the next few days. One of them, I will give you a sneak peek. We're going to have a new strategy with Alliance Bernstein, so we're really excited about that. That's going to be launching next week. We'll be having an email go out on that. They also recently added Russell 2000 to their strategy options. So on top of the S&P, the Merrill Lynch has been a great return for us the last few years. Year to date, it's up around 14%. And then we've got this PIMCO Global Optima Index as well. What's unique about the PIMCO strategy is a lot of times when you say PIMCO, people say bonds. This is not like that. This is built of emerging markets, international markets, US mid, small, and large cap. So it's a nice blend, and it is a total return index. Most of these indexes in the fixed index annuity world are price return, going back to the purchase price and the options that were purchased. With this PIMCO strategy, it is total return, so your client will be earning those dividends over time as well. So we've got some really great things happening on the strategies, and we'll be announcing those again next week with what the current rates are. So let's look at a couple illustrations here. For AIG, like I said, there is no guaranteed roll-up, so I think the time that they fit in best is when you're looking for income and you're looking for it today or right away. You can start income 30 days after issue. One thing I will say about AIG, which gives them a huge advantage when it comes to the increasing income world, is I don't know if there's another carrier out there that has the exact same payout percentages for their guaranteed income rider as they do their increasing income rider. Regardless of which rider you choose on this product, whether increasing or level, you are going to get the same payout percentage. That's a huge difference because like I said, I don't know of another one in the industry that does that. So I think AIG wins a lot when it comes to immediate income. Not only are we going to be competitive in the top 5 to 7 for guaranteed income, but we're also going to give them increasing income. So hypothetically speaking, $500,000 on a 70-year-old, dump it in, we can guarantee $30,000. And then non-guaranteed, now I will say this credited interest rate that we're seeing right here, it says 2.74. Please take into effect that we did have 10 years of zero averaged in there. So if you add up the first 14 years and divide by 14, you're probably going to get closer to about a 4%, 4.5% return. So anyway, just like to point that out. That's one thing that sometimes can be a red flag to clients is that you always got to point out all these zeros. Okay, but hypothetically speaking, we start with 30,000 guaranteed no matter what. And then let's just look at year one. Year one, we earned 1.69% interest. If you slide over here and look at the income base and do 500,000 times 1.69, you're going to get 8,450. That's what your new income base is. So let's just say your payout percentage, well, in this example was 6%. Generated the 30, you're still going to get your 6% payout, but it's going to be on 508 instead of 500,000, which generated about a $500 increase that year. Let's look at one of the years. If we look at the next year down, now you'll see every other year it's a little heavier on the crediting because I allocated probably more to a 2-year strategy than I did a 1-year strategy. I did a nice little blend. The nice thing about the blend is, as you can see, we earned interest all but 1 year. Some of them, yes, were much smaller, but to the client, they're getting increases, which makes you a hero. But in this second year, 13.74, you can see we had a really nice bump over here on the income base, which ultimately gave us a very nice bump when it came to income. We went from 30,507 to 34,699. Let's go down to a year where there was zero. As you can see, we were getting 42,872. We didn't earn any interest. As you can see, our income stayed the same. The income will continue to increase until this cash account hits zero. At that point, we're leveled out, and that's your new income for the rest of your life. Again, the power of increasing income, giving them going from 30,000 hypothetically to 57,000 with about a 4% interest. That's a really nice story to tell for your clients. I use this all the time as well to compete with SPIAs. I'm going to tell you right now, I probably won't be able to beat the SPIA. But what the nice thing about it is we're not only giving them a guaranteed income, we're going to give them increasing income. And I think the biggest point in comparing to a SPIA is that we're leaving all the control in your client's hands. If the client wants to take an extra $5,000 and take all the grandkids to Disney, they can do that. It may affect their income the next year, but they still have the capability to do that. When you write a SPIA, you're signing on that dotted line your destiny. It is what it is. It's never going to change. Same thing with annuitizing contracts or doing the pension buyout. I'll tell you right now, very rarely can we beat a pension buyout, like on what they're going to be offering. But what I can offer your client is giving them complete control, making sure their spouse is covered 100% till their death as well. Some of those options don't all come in the pension. Whereas with this, we're giving them increasing income. We're keeping up with inflation and we're keeping the control in your client's hands. Here are the payout percentages for AIG. As you can see, there's just one set. Well, there's two sets, but it's for single or joint. But again, this is really important because payout percentages make a huge difference. I think if we were looking at the Athene one at age 65, it was around 3.95. We're up at 5.25, so we're well over 1% ahead. So they're not only competitive when it comes to early income and being the guaranteed, but the fact that they don't drop those for increasing income just puts them miles ahead of anyone else. So I think this is a good product for clients who are looking for income in that first year or maybe 2 years. The big thing to think about when you're going a couple years out and using the multiplier is that the guaranteed page isn't going to look so pretty because we can't guarantee any interest in the first few years. We don't know what the markets are going to do. So that's something to keep in mind. The third product we're going to jump into real quickly is the North Americans Income Choice 10. Minimum on this, $20,000. Issue ages 40 to 79. With this product, you can start income 1 year after issue. It's good for both qualified and non-qualified money as well. The biggest thing about this product is there are no fees. Okay, so if your clients hate fees, don't want fees, whatever, this is the product to talk about. And with North American, they're very traditional, so you'll see a lot of S&P traditional strategies. They do have some daily risk control ones now as well. This S&P Mark 5 excess return is actually up double digits year to date. So we're seeing some decent returns coming through over on North American as well, but more traditional stance that they take. With this product, you're going to get a 5% bonus on the benefit base. I'm going to repeat that, on the benefit base. So often these bonuses, clients think they're getting a 20% bonus and they don't realize it's not on their cash. It's just on their benefit base. So I want to reiterate that. With this product, you're going to get a 2% guaranteed roll-up plus 150% multiplier. So 150% of interest earned plus 2%, that's what you're going to be credited. I think this is another great slide for explaining things to a client. If you've been in the industry and done income products for any length of time, I'm sure you've run into this with clients where they don't understand the two different values. So with this, we put 100,000 in, as you can see, initial premium 100,000. We get that immediate 5% bonus on the benefit base. So you can see that the benefit base is now 105,000. And as you can see, the accumulation account still 100,000. In this example that they did, we did 3% interest credited. We'll multiply that times 150, and you're going to get 4.5. Plus your 2% guaranteed roll-up. In this instance, you would have got a 6.5% bump over on the benefit base. So, as you can see, we applied that 6.5 here. Your benefit base is now 111,825. Your 3% interest was credited to the accumulation value. So you got 103. And I think this is just really helpful for clients to see it in a picture form. You know, if you die after 1 year, Mrs. Jones, your beneficiaries are getting 103,000. They're not getting the 111. This 111, I always explain, is kind of like a fictitious pool of money that is just used to determine your lifetime income. With this product, I think it's a good fit for clients who don't really know if they're going to need income, but they think they will, and they don't want fees. You know, we put 500,000 in. Again, you have to wait 1 year. So guaranteed wise, we can guarantee them 25,000, 436. But let's look at the non-guaranteed here. Again, I tried to illustrate all these pretty conservatively, 4% ish. So hypothetically speaking, waiting 1 year, we're jumping that up to 27,364. And then as you can see, after we turn that on, this income just keeps going up. It's going to keep going up, keep going up, keep going up, even once the cash account's been depleted. So again, it's just a great opportunity to share that story of increasing income. And this is a great product and an option for that client who really is concerned about the fees. Here are the payout percentages. For North American, you can see they got both single and joint. They also have the level and the increasing. So for North American, it's about you do have the choice of level or increasing with them. But it is a 1% difference in the payout percentages. So again, if we got someone looking for that immediate income, AIG is going to be your home hitter for that because the payout percentages don't change. All right, with that, again, I'm going to apologize one last time for taking of the little extra of your time today, starting a little late. I do apologize. The last poll question's going up now. If you do want information on all the products we covered today, go ahead and answer yes. Ashton in my office will then follow that up with an email to all of you guys today, laying out, giving you all the marketing materials. You'll get the different graphs and stuff that were included in the webinars as well. So, and then I will follow up with you in the next 24 to 48 hours to answer any additional questions you may have or see if there's any cases you're working on. So, with that, I hope you guys have a great Thursday, and we'll talk to you soon.